What's up, Money Minds, and welcome back to Market Briefs Video Edition. Today is November 15th, and here's some business and financial news you can finally use. I'm not sure if it's the time change or this cold weather that's been blowing through, but consumer and employee sentiment is dropping, and it dropped to a new record low last month. Let me read you a few statistics from our Market Briefs newsletter. Just last month, consumer confidence dropped to a new 10-year low. In addition, inflation also hit a 31-year high, and inflation is up by over 6% right now. In addition, over 4.4 million people quit their jobs in what a lot of experts are calling the Great Resignation. And right now, there are over 10 million job openings in the United States, which is 3 million more than Wall Street expected. So I want to break down why consumer confidence is so low right now and why employee sentiment is also dropping to a new record low. This will help us understand this Great Resignation and if it's going to last into 2022. But before I break all of this down, my name is Nate from Minority Mindset News, and if you like this video, make sure to smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. This shift in workplace confidence has been called the Great Resignation and has been going on for a while now. Over the summer, we saw millions upon millions of people quitting their jobs and taking the time to search for other ones. Consumer confidence is at a 10-year low. So what that means is that consumers are going out and spending less than they normally do. One of the key reasons why consumers are spending less now is because inflation is so high. This has scared a ton of consumers into not going out and spending money on goods. In a nutshell, inflation is the steady rise in price of goods and services over time. Typically, it's at around a 2 to 3% rate every single year. So something that costs $1 will typically go up to about $1.02 the next year. And after that, it'll be $1.04 and so on. Typically, inflation hovers around that 2 to 3% mark. But lately, we've been almost doubling that month after month due to a variety of different things. One of those things is our supply chain crisis. In large parts of 2020 and in 2021, many industries had to shut down due to the pandemic. So that meant that a lot of our industries were backed up. They couldn't produce goods, but people were still buying a ton of things. So that meant that all of our manufacturers and our suppliers got behind. And the government was giving out free money in the form of stimulus checks and extended unemployment benefits. So people were making more even though they weren't working. A lot of those people ended up spending that cash. In addition, the federal government put a stop to some mandatory payments, like you didn't have to pay your mortgage or rent if you couldn't financially do so. Also, federal student loans were paused through January of 2022. So people were getting a ton of money from the government, but then they were saving money because they didn't have to make some of these mandatory payments. A lot of people banked this money. We saw saving rates hit an all-time high back in 2020. A lot of people invested this money. We saw the stock market hit new record highs in 2020 and now in 2021. But we also saw the vast majority of people go out and spend this money. Now, when the money is initially printed, we're not going to feel those inflationary effects right away. Effects of that inflation are going to come later. So right now, and when the money was originally printed, people spent it and things were great. Inflation didn't really seem like it was all that high, but now that we're almost 2 years into all of this money printing and stimulus programs, well, we're starting to see inflation go way back up. So consumer confidence is dropping because people are going to the store and they can't buy what they need. In a lot of cases, it's not because they can't buy it, it's because it's simply not available. Now, later on, we might start to see that even though the product is available, people can't afford it anymore. That'll be kind of a little bit of a different situation though, but right now one of the main causes is our supply chain issues. So as inflation goes up, you're going to see consumer confidence start to go down. And right now that inflation is mainly due to all of our supply chain issues, but in 2022, the money supply is definitely booming. So we're going to see the effects of that inflation as well. And that leads us to the second half, the Great Resignation. 4 million plus people quit their jobs in October. And this is a multifaceted issue. There's a lot of reasons why people are quitting their jobs right now. One of the main reasons though is because people are looking for jobs that actually suit them and don't just give them a paycheck. People are looking for their dream jobs right now, their passion, and they've got the finances to do so. Like I said before, there was a ton of money printing back in 2020 and in parts of 2021. A lot of people invested this money, a lot of people spent this money, but there was also a good portion that went out and saved this money. When we see saving rates going up, what exactly are people saving for? Well, people save for emergencies. That way they're protected in case they lose a job. People also save for things that they want in life. Right now, we're seeing both of those saving measures come into play. Because people were able to save so much money, they can now take that money as sort of a protection while they look for a new job, something that actually fits them instead of them just working for a paycheck. And to be fair, wages did increase by around 0.4% last month. But that's not really keeping up with inflation. In addition, people are looking at companies for more than just a paycheck. They want better working conditions, better benefits, and more training. Company culture is important too. So if people are working at a job that it doesn't really fit them personally either, well, they're going to want to leave that job too. So this has led to a great resignation for millions of people throughout the country. For this issue to get solved, we're going to need to see companies and employees kind of meet in the middle. Companies can't give everything that an employee wants, and employees have to understand that companies can't give them everything that they want. More than likely, we'll start to see wages increase in 2022 as incentives build for companies. We'll also most likely see companies start to offer their employees more and begin to offer that culture that a lot of people are looking for. Before we move on to our next main story, I want to take a minute to talk to you about today's sponsor, Policygenius. If you've ever tried to go out and actually look for life insurance, you've probably realized one thing. It is super confusing. Well, if you use Policygenius, it definitely doesn't have to be. That's because with Policygenius, buying life insurance is easy and getting a quote is free. All you need to do is enter some information and Policygenius will research thousands of different policies and companies. That way they can show you the best possible policies that fit your specific situation, and you can get the best deal and save some money. When you use Policygenius, you'll learn everything you need to know about life insurance. You can also compare quotes side by side and then let Policygenius's licensed advisors handle the rest. Finding a quote is super easy and always free. So if you want to learn more about Policygenius and see everything that they offer, I'll leave a link in the description below on exactly how you can do that. Next up, I want to talk about the Johnson & Johnson split. Now, if you didn't see last week, Johnson & Johnson is splitting up its company just like we saw with GE. The company is going to become 1, pharmaceuticals, and 2, consumer products. And the main thing I want to talk about here is why a company would want to split up in the first place. The whole reason behind this is so a company can, 1, make more profits, and 2, become more efficient. Johnson & Johnson is looking to become 2 separate companies within the next 18 to 24 months. And if it does that, think about all of the things that will happen. Most likely, this new company will launch on the New York Stock Exchange. That means that people can invest in this separate portion of the company as well. In addition, people can now look at Johnson & Johnson as 2 separate entities. They can look at the pharmaceutical side and they can look at the consumer side. If you are an investor but you don't really like Johnson & Johnson's pharmaceuticals, then you can just invest in the consumer products. And this is an opportunity for Johnson & Johnson to look at their entire spending sheet. Are they overspending in certain areas and do they need to cut back? Are there areas that they could spend more money in? These will all be assessed as the company moves forward, which will help them become way more profitable. Sometimes we see the government will step in and make companies split up if they think that they have a monopoly in the space. We saw this many years ago with a ton of different companies. Nowadays, it doesn't really happen because there is such huge competition in nearly every single space. And there is one more reason why companies and Johnson & Johnson would want to split up. Over the last year and a half, Johnson & Johnson developed and produced one of the COVID-19 vaccines. A lot of people began to associate Johnson & Johnson with just its pharmaceutical business. A lot of people thought that that's all they did. And while this brought in a ton of business for Johnson & Johnson, they ended up making billions of dollars selling their vaccine to governments around the world. Ultimately, they don't want to be known for just making the COVID-19 vaccine. They want to be known for all of their products. And this is kind of a way for them to show people the difference. Lastly, I want to take a moment to thank all of you for subscribing and supporting this channel so far. We recently hit our mark to become monetized on this channel, and that is a big milestone for me and the entire Minority Mindset family. Recently, the written version of this Market Briefs newsletter did a feature on me and this Minority Mindset news channel. In that section, we talked about some of the best things that this channel has done, some of the hardest moments, and what my favorite moments have been so far. So if you want to check out the written version of this newsletter and get even more business and financial news that you can finally use, I'll leave a link in the description below on exactly how you can subscribe. And remember, this newsletter is completely free and delivered to your inbox at least 6 times a week. But that is it for today's business and financial newsletter breakdown. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.